If investing feels confusing, you're not alone. Stocks, ETFs, dividends, index funds, retirement accounts. It can feel like learning a new language, but here's the good news. You don't need to be a finance expert to start investing. In fact, some of the most successful investors follow surprisingly simple strategies. Today, we're breaking down investing for beginners. Start here and showing exactly what every new investor should understand before putting their first dollar into the market. Let's get started. Before we talk about stocks, let's talk about the purpose of investing. Investing is simply putting your money into assets that have the potential to grow over time. Think of it like planting a seed. You give it time, you take care of it, and eventually it may grow into something much larger. When people save money, their money often sits still. When people invest, they're trying to make their money work for them. That's one of the most important ideas in investing for beginners. Start here. Your goal isn't just earning money. It's building assets that can grow. One of the biggest advantages in investing isn't intelligence. It's time. The earlier you start, the longer compound growth can work. Compounding happens when your investments generate returns. Then those returns generate additional returns. Over long periods, this effect can become powerful. That's why many investors wish they had started sooner. Even small amounts invested consistently can add up over time. The key lesson? Start before you feel completely ready, because time is one of the most valuable investing tools available. Let's talk about stocks. A stock represents ownership in a company. When you buy a share, you're buying a small piece of that business. If the company grows and becomes more valuable, the stock may increase in value as well. Some companies also distribute profits through dividends. But remember, stock prices can move up and down. Investing isn't about predicting tomorrow. It's about participating in long-term growth. This concept is central to investing for beginners. Start here. Many beginners think they need to pick winning stocks. The reality is different. Many investors choose index funds instead. An index fund holds many companies in a single investment. Instead of betting on one business, you're spreading your investment across many businesses. This can help reduce risk through diversification. It's one reason index funds are often recommended to beginners. They provide broad exposure without requiring constant research. Simple doesn't mean ineffective. In investing, simple can be surprisingly powerful. New investors often make the same mistakes. They chase trends. They panic when markets fall. They expect quick results. Successful investing usually looks much less exciting. It often involves patience, consistency, and long-term thinking. Markets naturally rise and fall. Temporary declines are part of investing. Understanding that can help investors avoid emotional decisions. That's a critical lesson in investing for beginners. Start here. If you're enjoying this video, hit the like button and subscribe. We post weekly videos covering investing, personal finance, wealth-building strategies, and practical ways to improve your financial future. Now let's discuss how beginners can actually get started. Getting started is often easier than people think. Step 1, learn the basics. Step 2, open an investment account. Step 3, decide how much you can invest regularly. The amount doesn't have to be huge. Consistency matters more than perfection. Many successful investors focus on investing regularly instead of trying to time the market, because nobody consistently predicts market movements perfectly. Regular investing helps remove emotion from the process. One mindset shift can change everything. Don't think like a trader. Think like an owner. When you invest, you're becoming a partial owner of businesses. Businesses create products, serve customers, generate profits, and grow over time. This perspective helps investors focus on long-term value instead of short-term price changes. Among all the lessons in investing for beginners, start here. This may be the most important. Ownership creates wealth. Speculation often creates stress. So let's recap. Investing means putting your money into assets with growth potential. Starting early matters. Stocks represent ownership. Index funds offer diversification. Patience beats panic. Consistency beats perfection, and long-term thinking often beats short-term predictions. That's why investing for beginners. Start here is less about finding the perfect investment and more about building the right habits. And in the next video, we'll break down the exact differences between ETFs, index funds, and individual stocks, and which one is best for different types of investors. You won't want to miss it.